we go. Good evening and welcome. This is the Thursday evening Viper Trading webinar. Here to learn about trading markets using the Viper tools. You are absolutely in the right place. So without further ado, let's knock out our standard disclaimer and get over to some charts and look at some trade setups, which of course is the reason everybody's here. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here, as well as listening on this recording, are to trade at your own sole discretion. Now, what I said just a second ago before I fired this recorder up was that tonight's topic is trading trends and ranges. So let's get over to our friend Mr. Screen 1, where we have a nice, cozy Russell chart awaiting us. So here's how I'd like to approach this. What I found over the years, and not only for myself, but in all the traders that I talk to, and we, part of the team, and we trade with all the time, what have you, is being able to tell, the difference between a trend and a range and how you trade it. Let's do it like this. Let's just, for the time being, put the predictors on hold here. And here's what I'm gonna do. I'm gonna scrunch this Russell chart up. And what you're gonna see, this is kind of almost the whole day in a snapshot. And so let me get it. For those of you that are new or visiting, let me just get you quickly oriented up to speed here. So I'm here in California. Open to the equity markets is at 6:30 a.m. Pacific time. Which is approximately right here. And this is the Russell. We trade the two equities in the room, the Russell and YM. Both are $5 a tick. We're currently on the June contract. You know that. Some of our traders trade NASDAQ. Show of hands, anybody still trade NASI? NQ? Also $5 a tick. Couple of NASI traders in here. Okay, cool. We'll look at NASDAQ tonight. Of course, we trade gold. GC, we trade crude oil. Those are $10 a tick. And some people trade ES. ES minis, Nazi, David D. Okay, quite a few of you. Excellent. We'll cover all those tonight. Now, when you step back and you look at this, when you look at the entire day, what would you say the prevailing trend for the day was? Now, in retrospect, what was the prevailing trend for today? Was it up, down, or sideways? From 6:30 over here all the way until almost the close. Here's 11 o'clock. Close of the market's at 1:15 or 1 o'clock, whatever, over here. So this is almost pretty much into the close. Down. Yeah. Sideways to down. Good. Okay, good. Yeah. Now, there are, for lack of a better way to put it, there are good downtrends and there are not so good downtrends. I would say downtrends that are not so friendly. What I mean by that is this. Okay, keep this picture in your mind. I'm going to compare this. Let me do it this way. I think here's probably the best way to do it. I want to go back here we go. Okay. All right. I'm going to toggle between two different days, and we're going to discuss the different ways you have to approach it, because every trend is not created equal. Every range is not the same. And sometimes, ironically, the two can blend together, creating even more confusion. Let me show you what I mean. Let's go back to this day right here. Where the heck is my screen thing? I lost my mouse. Hold on. All right. I believe this was yesterday. Yeah, okay, so midnight Pacific was here. This is European. This is the end of the Asian session over here to the left. European session kicks in here. Open of the equity market in the United States is at 6:30 Pacific. That's right here. So by the time, when we got the open yesterday morning, I think we all would agree that the Russell and all the equities pretty much were already in an uptrend, yes? In other words, before 6:30 came along, the market kind of looked like this. Here we're 6:30. Yeah, okay, so here's coming in at 6:30. It's choppy and fairly sideways overnight, but I think you can very quickly, just sort of with your just sort of visually looking at it, you can envision sort of a little bit of a channel, an upward channel that's forming on the Russell. You could actually put lines on here if you need a little bit of help, trying to visualize it, but that's more or less an uptrending channel. Where I think that, and I'm looking for a couple of comments and feedback here, where I think the challenge, let's contrast this part of the uptrend with this part of the uptrend to the right of 6:30. So the other way to look at this is you could say, well, yeah, it's in an uptrending channel and it's checking the bottom of the channel, top of the channel, and then it just takes off like a bullet. The buy programs kick in and she just is off to the races. Pop quiz to make sure everybody's paying attention. Let's go to the right of 6:30. So we're looking at, generally speaking, from here to all the way over at 7:30. So the first hour. And I'm going to give you about, well, it's a channel, but it's a steeper channel and very pronounced in the up direction. Clearly, the buy programs are in control, no question about it. I see 1, 2, 3, arguably 4 or 5 long buy opportunities on this chart to the right of 6:30. Can you name at least 3 of them? You would name it you would type it in terms of the number. So, like, I'm going to throw a number out here. I'm not going to give you one, but let's say 1631 was, whatever, 1628. So a number or a time. Well, here's time down here. You could type in, 631. That's not one, obviously, but can you type in, and I'll give you some time on this. I'll give you 30 seconds to see where the long entries were. There's 5 of them. Time-wise, down here, just punch in a time where you see 1 or 2 or 3, and or the price level on the right here. So you would type in, 1649.10. That's not one because it's way up here, but I'm just showing you an example. All right, good. We're getting some numbers coming in. Dan naming a couple. 34, 38. Those are looking good. Dan, I think, nailed all 5, I think. Okay, Mario typing in some. Those look good. Greg asking a question. I'll answer that in a minute, Greg. Just do your best to try to see at least 3 of the 5 long trades. There could be more, Robert. Yes. And I'll speak to those. But for now, I'm looking for sort of the 5 obvious ones. There's 5 obvious ones that pretty much kind of stand out in terms of our, system and methodology we use here to enter trades. Lots of answers coming in. Hey, Chris, how you doing tonight? She's put in times, not levels. Cool. Time or levels. I'll give you another 15 seconds. Time or levels where you see 5 long trades on this nice, beautiful uptrend from yesterday on the Russell. Just do the best you can. Time is down here. Price level is to the right. Toggle the predictors on a little bit if you need those. They looked like this at the time. Okay, we'll go another 10 seconds for finding 5 long trades on the Russell chart from yesterday morning. Predictors on, predictors off, predictors on. Time's almost up. Type in your calls. You don't have to get them all. Just try to get a couple of them. 5 seconds. Okay, some of you can't see the numbers. That's cool. If you can't clearly see the numbers, don't worry about it. Time's almost up. We're gonna look at them right now. Kenneth, those numbers look good. Yeah, Lewis, it looks good. All the numbers and times look most excellent. All right, time's up. Great feedback. Now, it's important to remember that when we are in an uptrend, we have this notion of thrust and retracement. So the thrust is obviously, in an uptrend is up. So for instance, here would be an example of a thrust here, right at the open. Now, if you notice, and let me do it this way so I can answer your questions in terms of somewhat more precise entry levels. Here you get a retracement very nicely, very methodical, right back to the midband at 3470-ish. At 635, 636, which you could, and I believe we did, box this in the room and take. I believe I took this myself, actually. Filled long on the close of that bar. So that's trade number 1. 635, 636-ish. At 43.70. So you said anywhere in here around this midband bounce, that was trade number 1, and you were correct. Market gets another thrust up here, and then we get another retracement down back into the midband again right here at 38.60 at approximately 642. So I'd say from 640, 41, 42 to 643. So anywhere if you answered in this area right here, kudos, this is long trade number 2 right here. Buy programs continue. We get another thrust from this box going up to here, and then another thrust over here like such. This would give you long trades 4 and 5 right here. So if you said anywhere around, there isn't really a swing here, but it was the midband at 40.50 and another one at 41.10 around 6:51 a.m. Pacific right here. That was long trade retracement number 4 right here. Perfect textbook midband. Beautiful. Just don't you love it when markets are just so well behaved and they respect support, they pull back and they hold that midband, they bounce, you get a huge thrust, trail your stop out, re-enter. I mean, this is the kind of market, all due respect, is just handing you money. I mean, it's just handing you money. I mean, you didn't have to get all these trades. You could have just caught a couple of them. Here, let's look at this one right here. Here's another one. Let's see, 1, 2, 3, 4. This is 5. It's long trade number 5 at the midband here. You said anywhere around 42.80 and 7:08 in the morning to 7:10. Sat here for 3 minutes. Plenty of time to take it. So that's your 5. Arguably, this would be a trade number 6. Not quite a phantom, but here's a thrust, stop out, another retracement. Now, yeah, you missed the third one. Don't worry about it, Chris. I saw your numbers. You got most of them. You got almost all of them. Congratulations, everybody nailed this. Now, a few people, I think Robert typed in, I see 10 buys. So what he's saying is, let's look at some examples of that we've discussed before, the more shallow retracement entries that qualify as long trades. So we just did the ones that are obvious at the midband here. See them? Okay. But let's see where there was a shallow retracement that could qualify as a long entry. Let me ask the team. Let me ask you, everybody in here. Does this meet our criteria? Yes or no? Now these short questions. I'm only going to give you 5 seconds to answer. Just type in a Y, BIP, or N. No. And you got to remember what the criteria for the qualification is on a shallow retracement. So the question here is, this box qualify as a long trade, yes or no? 4 seconds left. Three seconds. Just type in a Y or an N. Either it is or it isn't. It's that simple. It's very binary. No maybes in here. 2 seconds left. Long entry box, shallow retracement, qualify, yes or no? Okay, time's up. So just a refresher, and I think everybody's, I don't see any no's. All yeses across the board. Perfect. So the criteria is that we have to close below the stealth line in an uptrend. So that's the green snaky line right here. And line 6, which is the thin line right here. That's line 6. It has to have bars closed below those. And here you have 1, 2, 3, 4 bars below, piercing both of those levels. So the answer was yes. This is the least amount of uptrend retracement that will qualify for a bona fide long trend entry or long trade entry. So that was a yes. Good for you. Let's look at some more of these interim trades. Okay, let's go up here. How about this one? Yes or no? That pullback right there. Does that qualify? Is that bona fide long trade? 5 seconds on the clock. And I'm going to go legit 5 seconds. 4 seconds. Yes or no? You got to instantly know. You got to look at these things and say, yep, I'd take that. Nope, going to pass. Yep, take it. Nope, going to pass. That way you're not sitting around, the time's rolling by you, trades are coming and going in real time, and you're missing them. 3 seconds. 2 seconds. Cast your vote. Is that legit or not? 1 second. Okay, time's up. This does not meet the criteria. While arguably it is a pullback and you get the wick of a candle slightly touch line 6 and stealth, unlike this one right here where you get closes below in this area right here, this does not qualify. This is a no. This is not enough meat on the bone, right, Greg? It hasn't come back deep enough yet. Okay, let's do one more and then we're going to move on to today's price action. So I think we're all up to speed. Couple I want to ask about right here, and this is the last. We'll talk about long trades from yesterday morning. I'm looking at 2 areas right here for a. Let's just do one. I'm gonna do that right. Let's do that one right there. Bona fide long trade entry, meeting our criteria, yes or no? Just type in a Y or an N. I'm going to go super quick on this one. No time to think about it. 4 seconds. Super quick. 3 seconds. To meet the criteria. If you saw that tomorrow on the Russell, would you get long in there? That's what you're asking yourself, really, legitimately. Right? Or you're trading YM. You're trading YM and it looks like that. Would you take it? That's what you're going to be asking yourself tomorrow morning. Oil, gold, uptrend, pulls back. Legit? Take it? 1 second left. Time's up. Okay, excellent, good. This is a yes. Like this box right here, we pierce line 6 and stealth and close below it. These 2 bars, arguably 1, 2, 3, 4 bars again. Now you get another secondary shot at it because it doesn't just take off right away. You get one more shot kind of right in here. That's legit too, right? See it? 2 legit shots. This is not legit. You're trailing your stop. Still in it, right? See it? Didn't pierce and close below. Good. Okay, perfect. All right, good. Now keep this mental picture of this beautiful uptrend with all these just textbook long entries on the retracements in your mind's eye. Now let's fast forward to today and look and contrast it with the downtrending day we had this morning. Okay, I'm going to shuffle over to this morning. I think almost everybody in here said that we were in a downtrend. Predominantly for most, if not all, the day was in a predominantly downtrend. Now, here is the downtrend you were left with today. What do you make of that? What do you make out of that? It's a mess. I don't think there's any other word to say other than it's a mess. That is a mess. Well, when we say mess, what do we mean mess? It's a mess. What are we talking about? Why is it a mess? Does this thing look anything like the chart we saw from yesterday? Is there any similarities at all? Just look at it. Choppy, sloppy, good. Dennis, Philip, not too tradable in Lewis's opinion. So it's a downtrend, but it's really choppy, right? No conviction, no follow through. Mario and Toby, good observation. So here's the challenge with trading something like this. Now, coming into this morning, you can see the background was red. We broke the support level. But it comes up, it doesn't roll at the midband here. It shoots all the way up into here, and you get a green background. So, in some respects, at this point, you might be thinking, here, let me go back and pretend we don't know what happens. Like that. That's the first 15 minutes of your market. Now, how might we have known that we were going to be choppy today, early on? What could we have done to this chart to help us visualize what's going on here? Any ideas what you might do in a situation like this? Put some lines on it. Good. Good. Put some lines on it. Put some lines on it. So when you go in here, you can pretty much say, in the morning session, it was choppy too. Yes. I mean, you arguably you could put 3 lines on here. You could kind of a line down here at this support level. You could make the pretty good case that there was some resistance mostly overnight right up in here. And obviously everybody can see that the high level of resistance that it hit like 5 times was up in here. Now, yeah, so that's the range. You put so one of the things that I think most of you, and if not all of you, know is that it's one of the most important things to do when you start in the morning. Get up, fire up your machine, get your charts loaded, connect to the data source. I repair my database every day. If you don't know how to do that, I'll show you how to do that. That's the routine I have. So I log it. Actually, technically, here's how it works. I go in and I bring up my browser and I do a quick Google search to make sure I'm connected to the internet and everything's cool. That goes well, takes only a couple of nanoseconds. I pull up Ninja. This is all before the market opens, right? Pull up Ninja, get, everything loads up on Ninja. I go into Tools. Here, I'll just show you. This just takes like a minute. I mean, literally, you got to give yourself a couple minutes in the morning to get all this stuff organized. Actually fire the machine up way early in the morning, and then I turn on everything. And so Ninja's ready to go when I'm ready. Everything's all kind of loaded and ready to go. So here's how you do it. Tools, options, data, repair database. Okay, now you don't want to reset it. Reset it will wipe out everything you have. All your records, all your transactions, all your trades, any kind of strategies you have running, or, whatever you got. Reset just resets everything. You don't want to do that. Just do the repair. I'm not going to do it. It's going to lock it up for a little while. I don't want to go through all that. And you'll hear a little bing, and it's done. Okay? All right, now you're good to go. Now you connect to your data source, file connect to data source, and you bring up your charts. So if you want to look at the Russell for the day, you could do a ping speed test. I don't do that in the morning, Philip. I got the high-speed modem, so I'm usually pretty quick on that. And you come in here and you look at the pre-market. So here's the pre-market on Russell. And you see some support resistance levels, and bing, bang, boom, 3 lines on the chart. Just like that. No, excuse me. It appears, and this can change over time as the market opens up, right? That you have kind of 2 ranges. You got this upper range here, which isn't really clean, okay, because you got all these bars kind of oscillating around it, and then it respected it here, and then it sort of did respect it over here, and then you've got a lower range that looks like this. This range down here is 46, 47 to 50, so this is arguably about 35 ticks, and this one's from 50 to 53, so about 30 ticks. So overall, really, if you think about it, you're in about a 60 to 70 tick range overall, sort of broken into 2 ranges, if you will, with this sort of 50 area being at the middle of it. So even though this is a huge range and it meets our criteria, sorry about that, I don't know who that was. Yeah, so our criteria is 20 to 25 ticks in size, and this meets it, and this meets it. But that being said, if you say, well, you said that 20 to 25 ticks is a tradable range, right? And you're at 30 and 35, arguably almost 40 ticks on this lower range. But the other criteria is how the price action moves within the range, right? So let's unfold it together. Here's 630. I'm going to recreate that first 15 minutes. Okay, there's 638. There's 645. So that's the first 15 minutes right there. Now, what makes this particularly challenging is the fact that even though you identified these ranges with your support and resistance levels, we're not really getting up in here to do anything, are we? And furthermore, I would submit to you that we're not getting down here to decide whether we should be buying at support. We're stuck in the middle. We're stuck right here. In fact, it's oscillating in a 15, 20 tick range around the middle section of support and resistance. So my question to you, looking back on this right now, was this first 15 minutes of Russell, was it tradable, yes or no? I know you have the benefit of hindsight, but with hindsight, what would you say? Is this something if you see a market that looks like this tomorrow morning, should you be trading it, yes or no? Let me help you out. Let me help you out with an answer. I'll use it. I'll do it graphically. Like this. Okay. When you see chop like this, you got to avoid it. There's no phantoms in here. There's no buys in here, and there's no shorts. There's no nothing. This is a nothing burger. Here, I'll just make it explicitly clear so there's no question about it. Avoid trading price action that looks like this. I don't want to mince words here. Oops, forgot the K. Sorry about that. Okay, if you see any price action on any instrument that looks at all like this, where you have support and resistance in a big old range, and you're in the middle of just chopping sideways with a bunch of yellow bars, not giving you any clear direction and not challenging support and resistance, you have to stand down. This will eat your lunch. If you're like in a combine or something, and you're trying to maintain discipline and not have a lot of drawdown and all sort of things, is what you have. You can't trade this. It'll kill you. In the first 15 minutes, you could have taken a long here, a short here, long here stuff, and you stop out on a couple of contracts, you can be down $500 or $1,000. Oh yeah, I see that. It's hard live. Okay, yeah. Good. I like that. Okay, good. Yeah. Okay, let's. I love comments like that because I get to address them. Cool. Yeah. All right. So here's the lines that we drew before 6:30. This is the pre-market support and resistance. Everybody sees that, and I think we all agree that this is where support and resistance was on the Russell at 6:30. Yes? Right? Now, before I advance the chart, I have a question for you. Even if you draw these lines that were valid in the pre-market session and all the way from the close yesterday, or yesterday. Here's midnight Pacific. So we're talking about all the way here. Here's the close yesterday. So this has been arranged since 1 o'clock in the afternoon yesterday through 6 o'clock. So you're looking at 17 hours of chop. Now, is it always going to respect these lines? In other words, is it always going to, or is it going to go hit these lines all the time? And if it doesn't, what do you do? Here's what I mean. What the heck are you talking about, Charles? Let me show you. Okay, we're looking at it real time. Now, I would not alter anything based on this drop right here, because arguably, you are within striking distance of the support level. So I would call this a check of that support. Now let's keep going. Stop right here. And let me ask you a question. Should you adjust this middle line to here, yes or no? We had it drawn here, but now we're 4 or 5 minutes into the open, and you got a swing here that would like 15 minutes before the open, and you're getting swings here. Should this line move to here, yes or no? We're 5 minutes in. Well, here, let's put the predictor on there. Maybe that'll help you out a little bit. Yes. Yes. I mean, you have two choices. You have two choices, really. You can leave this line here and draw another one here, which I personally think is a little bit confusing since they're really close together. Or you can simply admit the fact that this top of this range, notwithstanding this one up here, this is not changing. It's not getting up here, so this is irrelevant. This is irrelevant right now up here. What I'm trying to address is the comment that came out from Robert that said, and I quote in bold caps, "It's easy to see this when it's done. It's very hard to see it live." I'm trying to show you, everybody in here, how you do it live when you're really doing it. When you're really doing it and you go into the morning and your line is sitting like this, and it comes down, it checks that support, this one is holding. So you don't do anything down here. This just stays right where it's at, right? See it? Now, you start to advance the chart. You advance the chart. You can see that it's starting to test this area right here, and you can move the line up. Right? You can move the line up. Or you can put a secondary line there. Leave this one where it is. And now you're 6 minutes into the trading session, and now you have a fresh range that's setting up right here. Now, this swing right here and these swings right here, and you're going to see what I'm trying to get at in a second here. Just stick with me. Is this series of swings, now you're 10, 15 minutes in, is this getting back down to here? No. So in effect, what has happened is that now you have a tighter range. I mean, tomorrow morning, if you get up and you're looking at your chart, let's say you're trading ES, and your pre-market chart looked like this on the left, and you get into the open of the session and it starts doing this in a very, very tight, maybe 8 or 10 tick range. Is it possible that now the range has tightened around the middle of the overall total range? Now, circling back to that question. Once you have put these lines on here, now you are in a range in the middle of the current overall range, yes? And support is here just about 49.50-ish, and resistance is up here, I don't know, arguably near 51. So 20 to 25 ticks from a qualification point of view in terms of size, yes, it's its very lowest end of tradability in terms of the range. However, we can see that the price action inside of the range is not conducive to trading. In other words, it doesn't come nicely down here and sit on some clean, cleared, well-defined support area for you to actually put a buy order or box it down here and then get filled reasonably. Furthermore, you don't know that it's going to hit this one or way up in here somewhere, or this could be pierced. Let's continue on. And here you go down and break down and check this final swing down here. The 47.10 holds again. Comes right back up, right back down. Breaks it by a little bit, back up, and now you're in this. Now you're back in this range. You were in this range, and now you're in this range. Did anybody try to trade this? Did anybody try to trade this and get whack-a-mole? Now you're starting to break down. Now you're starting to get a trend move. So things kind of change a little bit here. Now you're at almost 8 o'clock. Roger says, I didn't take one trade today. Mario says he traded. I started to trade Russell early over here. I can't remember. I took a couple of trades. I think, I think 2 were a winner, or 1 was a winner, and a couple were losers, and I was kind of scratching my way through here. I think I shorted one of these rollovers and caught a little bit of this. And then I just said, hey, this is just a mess. I don't need this. I don't need this today. So that's how you tell. That's the other way. If you're not really skilled at drawing the lines and quickly identifying a range and knowing whether to stay out, if that's what you're saying, I can't see it in real time until after the fact. Then certainly you could see that even if you didn't draw the lines, that you were just chopping around in here. I mean, I don't know how to say it. You were just chopping around. There's just no, where are you going to get in? Put on the TV. Yeah, some days it's just not, let's continue, let's advance. And I want to show a couple other instruments. I don't want to spend all day on this. You didn't really get a decent move until over here. And this was even tough because the background changed and you got blue bars and it actually started to look like this was going to head up over here. It did pause a little bit here. You could have caught this. You never really had a decent retracement until way over here. I'd say that you couldn't even really get in this move until this move and the tail end of the move right here. That's short. I'd say that's the only decent, legit trade on Russell. Okay, what do we want to see next? Let's either do YM, NASDAQ, or ES. Cast your vote. Whoever wins goes next. Let's keep it to the equities for now. We'll look at crude later. Okay, Lewis? So either ES, YM, or NASDAQ. A lot of ES is coming in. All right, let's take a look at ES today. Now, you're going to remember what this looks like, okay? Because I'm going to show you the ES chart on how it traded and how different it was. Yeah, no, I'll try to squeak in crude. I got 15 minutes. I'll try to squeak everything I can in here, okay? I'll just have to pick up the pace a little bit. We're going to look at ES, and then a couple people asking for crude. Paul's asking for crude. We'll try to squeak crude in here. All right, now most of you know that hold on a second. It's trying to load. ES is a $12.56 a tick instrument, so it's more than 2 times the value of the other $5 tick instruments like YM and NASI and RTY. So from a risk return point of view per tick, it's twice as much. However, it only moves half as much or less. So for instance, if you get like a 20 tick run on YM or a 30 or 40 tick run on Russell, you might only get 8 or 10 or 12 ticks on ES. 20 ticks for ES is a huge move. Okay? So with that being said, let's come look at what ES did this morning at the open. And what I'm saying is I like to use a 2-range chart. Same setup, same everything, same chart basically. It's just a little bit faster because if you traded 4s 4 bars or larger, you wouldn't see, like, it wouldn't, it would just all be contained within the bars. You wouldn't see hardly see trades at all. You need to use something a little bit faster, like a 2. Now take a look at the price action on ES here from 6:30 to 8:30. There's your predictors. Take the predictors off. Toggle them on and off. Now, in the interest of saving some time, I'm going to help you out. Does anybody see short trades on here? Here, let me help you out. Here's 6:30 right here. So after they open, are you seeing short trades? Everybody seeing short trades? I don't have time to call them all out. Where's the short trades? You see 2 or 3 of them, Toby? Well, I mean, one of the things you could do while it was happening in real time is draw a downtrend line that would look something like this. All these peaks are staying under the midband. They are piercing stealth and line 2. I'll just show you a couple of them. You see 5 of them, Dennis? Okay, good. Chris sees 3. Toby sees 2 or more. So here's your first one right here. Let's scalp. Let's do a couple more real quick. Here's one right here. Meets the criteria, right? Closes above stealth and line 2. Arguably, here's another one right here. Here's another one right here. Here's 2 right here and here. And then the final one is over here. How many shorts did you have on ES in the first 2 hours? 1, 2, 3, 4, 5, 6, 7 shorts. And all worked out for scalps. Now, a tip on ES. There are scalpers. Now, there's all kinds of market participants trading ES. Some of them only go for a tick. How can you make money on 1 tick on ES? How can you do that? How is that possible? You got to be kidding me. You're saying that people trade ES and only get a tick and they make money? How is that possible? You're just making that up. Nobody makes money on 1 tick. That's ridiculous. You need at least 3 or 4 or 6 ticks to make money. Well, with a 2, the stealth line shows up and sometimes it doesn't, Robert. It depends on the depth of the move. In this case here, if you don't have a stealth, you need to use line 2. Yeah, the big boys are paid to provide liquidity to the market. They're paid to do it. Their trade costs are 0. They don't have any trade costs. Okay? When you're paying commission and slippage and getting in and out and all that stuff, it's hurting your bottom line. They don't have any of that. They're getting paid to put liquidity in the market. So to them, a tick is free money. So that's what you're up against when you're trading ES. So when you're scalping, you have to dial it down. So like on Russell and YM, if your scalp trade is like 6, 8, 10 ticks, it's going to be a lot less here. Your scalp is actually like 3 or 4 ticks. And if you want to get a runner, here, let me show you the biggest runners of the morning for the short side of this thing right here. So, I mean, arguably over here, these ones 18 and a quarter to 16.50. This is like 4 ticks, 5 ticks. This one here, 18 down to 16, 8 ticks. This one went from 16 and 3/4 all the way down here, I don't know, to 12 and 3/4, 4 to 16 ticks. That's a big move for ES. Here's another one over here. This one was probably 8. This one went from 15 down all the way to 8. 7 times 4, 28. This is a huge move. You don't see these a lot. This one went from 11 down to 9, so 8 ticks here. So, you got to scalp out. The way you got to approach ES is when you short these rollovers, however you get in, you put a limit order in, you can box it, close outside the box, draw a line, however you're in, market order. Whenever you get short, you got to realize if you put 2 lot on ES, you're going to want to peel some at 4 ticks. Take that your first scalp on ES is a 4 tick scalp. Move your stop to break even and then trail your stop on whatever runner you got left. That's how you have to approach ES. Now, the liquidity on here is huge. Okay, it's not unusual to see 1,000 bid, 2,000 offer, and just big, huge chunks, 500 lot at a clip clipping through here. $1.5 million. It's the most liquid futures contract in the world. $1 million to $1.5 million plus contracts traded every day. You're not going to have trouble getting in and out of here, and your slippage is going to be minimal, if nothing. You know, and then you flip over here. You flip, and you actually got a long trade. Now, the room was closed by the time this happened, but you get a nice little pop off the mid-band here from about 14 all the way to 20, 21. That's 7. There's another 28 tick move there. That's huge. Anything over 20 ticks, 30 ticks on ES, that's a big move. Yeah, so you get in, and either you have you let in the case of the short here, for instance, you can set up OT to minute. You peel your 4 tick scalpy out, get your stop on the second contract right down to break even wherever your fill was, less a tick, and then trail your stop, trail your stop, trail your stop. If you have an established bottom, you're going to notice that ES respects these support and resistance levels, and they bounce and flip. So what I'm saying, just to be clear, is if there's a support level down here and you're short, you want to just cover down here. Don't give 10 of it back for all the way up here. That's not how you trade ES. All right, we had a request for crude. Let's get our friend Mr. Crudy Crude up here. $10 a tick. Today was oil inventory at 8 a.m. Pacific time. So leading into the 8 o'clock inventory numbers, it was pretty darn choppy. You see that on ES, Lewis, for everybody trading ES? If you take a trade without runners, you have 2 choices, Robert. If you're going to trade 1 lot without runners on ES, you can just go for the scalp, whatever that is, and take it off and be done with it. Or the 1 lot is your runner. The 1 lot is your runner. You don't have a scalp. Okay. Lewis says, I just stick with Russell for the day, and that's all I do. Cool. Yeah, well, you're living the dream. I mean, this is what we told people many years ago, as we said, the whole goal of this is to find an instrument that you like, get really good at it, and just make money on it every day. It's like your friend. It's like a business partner. It's like a spouse, a wife, or, whatever, a husband. It's just like that. It's somebody you're going to see every day. So you better get to know them and like them pretty good, right? If you, just an example, let's say if you try to trade crude and you get your whatever handed to you every day, well, then do you want to keep going back to crude? No, find something else. Now, here is before inventory. Now, here's why we say to stay out of crude inventory. Okay, here's 8 o'clock right here. See it? It even started a little bit early. Here's 7:59. All right, so these are news bots. Okay, let me explain real quick. Everybody thinks some of you know what's going on, but I can just tell you what's going on in these inventory numbers, and this is why you want to stay away from it. Okay. Today is 31st, right? June 1st tomorrow. Isn't that unbelievable? Okay. Here is crude inventories right here. Critical to crude oil futures instrument. They were expecting a drawdown of 400K, and they got, was that 8 times that much drawdown? Now, an 8 times more drawdown is bullish or bearish? How are the news bots going to react to an 8 times drawdown on crude oil inventories? Are they going to run it up or down? Is it bullish to draw down inventory or bearish? Don't look at the chart behind there. That's going to help you out. So what happens is a news bot is a algorithm, basically trading robots that are trained to go get that number and do something and act on it very quickly, pumping tremendous liquidity through the market in the direction that they want it to go. Now, sometimes these numbers get leaked to them, a few seconds ahead of time. So the news bots are reading this and they're saying, whoa, 8 times the drawdown. We're taking this puppy up. And so that's what this is. Can you see all these shotgunning bars going up, 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 run it up, pull it back, pull it back, pull it back? That's what happened. That's exactly what happened here. Now, that doesn't run forever. Here we are till about 8:15. So they had 15 minutes of news bots running on the buy side of the market, making money, making money, making money. You know, if I was to put volume bars up here, they'd be huge, right? They'd be huge. Now, that's not to say it's going to go up forever. Here you can see they turned around and started to run the silly thing back down. Look all the way back down, and then some. Look at that. Why does it go down after it ran all the way up on that bullish inventory news? What the heck is this all about? How do you explain this? And should you have been shorting this? What's going on? Tell me, tell the team. What's going on? What's your observation? Okay, we're getting some guesses coming in. Profit taking. Profitability for the big players. New news tariffs. Good. A lot of people get in and got to get out. Algill's at its finest. Whales dive in and eat the krill. Okay. Now, let me ask you, and when you look at, hopefully this might change how you look at price action a little bit differently. At what point do you think that all the market participants who were long from anywhere down here, even before the news came out, and in this run up here, wherever they got in, wherever your bot got you in, and you started, at what point does it stop being profit taking and turns into something else? Would you say that that's here? Would you say that it is here? Or would you say it's here? So let's do a 1, 2, 3. Cast your vote. When does this up move retracement stop being profit taking and turn into something else like sell programs? Here. Cast your vote. 2 or 3. Five seconds on the clock. When does this cease to be profit taking and turn into sell programs? 4 seconds on the clock. One of 3 levels is your choice. Four seconds, 3 seconds. Cast your vote, 1, 2, or 3. Where does profit taking from the buy news bots stop being profit taking and turn into sell programs, sell algos now? Time's up. In my opinion, I would say it would be 3. And here's why. At the time this is happening in real time, it's hard to tell whether, you know, this rip down here, if I put a fib on it, is probably about 50% of the move up to here. See down here? See this? Although it ate up almost all of the news bots running in inventory. So it took all this down move right here, took all of this away. All right. Clearly something else in play here. But the critical decision-making point, and one that you could have actually shorted, was when it came up and kissed this lower swing and rolled over. Now this is telling you that sell programs are in place right here. When that kissed and rolled, and now you get a series of lower lows and lower highs and lower, this is sell programs. That's what that is. That's not profit taking. The longies are long gone. They're long gone. This is sell programs in force. Good. All right. Well, that's all I had for today. Tomorrow, I think we have non-farm payroll. Let me get the Forex Factory up here. Let me show you something real quick here. Yeah, when you see a trend turn very distinctly from up to down, then that is a shift in the algos. Okay, the sell programs are kicking in, and you're no longer in an uptrend when you see that kind of change on like on oil right there, right? So now you're looking for shorts. You're shorting these rollovers. Each of these shorts, each of these rollovers here, in this downtrend, this whole pullback down like that, that's short. Short rollover, short, short rollover, short, 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 and then now it starts to go sideways. All right, here's tomorrow morning. You got some overnight news affecting some of the currency futures. If you trade currency futures, you should be aware of these news events. British pound thing, an hour and a half into the European session. Like if you're trading 6B, you're going to want to not have a trade on when that comes out, okay? That's red. That means that you're high impact. 6B is going to get jostled around. You got to know that. If you're a night owl, night bird, whatever, that you got to be aware of these news events affecting the currencies overnight. It's kind of like trading forex, right? 5:30 a.m. Pacific time is non-farm payroll. Do not be in the market when these news come out, okay? It's gonna get more shotgunning. It's like oil inventory. You should not be in the market when these numbers come out. Now you can wait a couple of 3-5 minutes when the market settles down and finds a clean, clear direction. Go in and start trading it. We have an ISM number at 7, so I expect tomorrow to be a pretty good roller coaster day. Yeah, you got a lot of news going on tomorrow. So, yeah, construction spending, some other numbers, ISM. Yeah, look for a roller coaster. Okay, Bill, thanks for coming.